Hello and welcome. This is All You Need to Know. I am Agam Vakil. Let's start by taking a look at the global markets at this point in time. As you can see, mixed cues coming through. And, well, the US market specifically, well, we did see the Nasdaq close in the green, but it was red for the other major indices. It's the same for the European indices, with cuts of anywhere between 0.4 to a 0.6% in for the CAC, the DAX, as well as the FTSE. And when it comes to the Asian markets, as you can see, Hang Seng taking a cut of another 1.6%. It's the same for something like the CSI. Nikkei, on the other hand, trading marginally in the green. What does it mean for our own markets? Let's take a look at the SGX Nifty. At this point in time, it has come off even further from where it began this morning, and we are looking at a level lower than the 11,000 mark at this point in time. When it comes to our own markets yesterday, the selling had certainly intensified, considering the Nifty came off by another 1.6%, with the broader market indices such as the small cap and the mid cap indices coming off even more, down by as much as 2.7%. The picture wasn't any different when it comes to the banking indices, where the Nifty banked down about 2.5%, and Nifty PSU bank taking deeper cuts. But you know, in terms of the other sectors, we did have the auto sector decline by nearly 4% in trade. But there was one sector that stood out, and that was the IT sector, which advanced by as much as 2% on the back of 5% gains in TCS and 2% gains in Infosys. We'll be watching out for whether or not we do see that strength come through in today's day of trade. Let's bring up the ADRs, and there was more weakness there as well abroad. So Tata Motors, ICICI Bank, HDFC Bank, Vedanta, all closing the day in the red, save for Infosys, which was the only stock which was listed abroad, well, closing the day with marginal gains. What does it mean for the contributors? Well, or rather for institutional flows, and we did see about 524 odd crores move out on a net basis from the FII stable. On the other hand, DIIs bought a little over 1,500 crores on a net basis. But coming down to contributors, once again, no surprises that we have, and we continue to see more pressure in HDFC Bank as well as ICICI Bank among the financials, and of course M&M, along with the rest of the auto sector, well, bearing down on the indices. TCS, on the other hand, along with Reliance Industries, are perhaps the handful of stocks which did provide, well, as much support as they could as in yesterday's day of trade. But we did see a 176-point cut yesterday, and it's a wait and watch whether or not we can continue that weakness coming through. But rollovers standing at 18% now for the Nifty. A lot of them are towards the short side. It's the same for the Nifty banking rollovers too, at around 16%. Excuse me. Let's take a look at how we see open interest pan out. You know, despite the fact that we did see the Nifty move below the mark of 11,000, we still see 11,000 put with the maximum open interest. This perhaps could change as we move into the next series, and we're likely to see a lower level put take maximum open interest. Let's pull up your most active options yesterday, and once again, as one might expect, we saw more writing around the 11,000 and the 11,100 calls. Well, when it comes to your India Volatility Index, again on expected lines, rose by another 12% at around 17.4. This is where things can get worrisome for those traders who are long in the market. But the Nifty put call ratio, came off to around 1.05. Now at a neutral territory of around 1. It's the same for the Nifty banking put call ratio, which also came off at around 0.53. And Walk Hard, of course, moves out of the F&O band. Watch out for this one. And among others, I'm also keeping an eye on Motherson Sumi. This stock took a hit of around 8% yesterday, and substantial rollovers picking up towards short side. Bajaj Finance is the other one which took a knock of around nearly 5%. At one point in time, it was, well, inching towards the 2200 mark, and we saw shorts there as well. And Muthoot Finance, again, from the financial sector, also taking a hit around 5.6%. So pain all throughout. Can we expect respite today? Let's wait and watch. But with that, let's go across to Paul Allen of Bloomberg for the top international headlines.
Supreme Court nominee Brett Kavanaugh says he's not perfect, but insists he is telling the truth and denying sexual assault claims from 2 women. He's told Fox News he had no physical contact with Christine Blasey Ford when they were in high school and did not assault a second accuser, former Yale classmate Deborah Ramirez. He earlier told the Senate Judiciary Committee he would not withdraw his nomination based on smears.
I'm not going to let false accusations drive us out of this process, and we're looking for a fair process where I can be heard and defend my integrity, my lifelong record of promoting dignity and equality for women, starting with the women who knew me when I was 14 years old. I'm not going anywhere.
President Trump has been briefed on last week's Inter-Korea summit and says he expects a second meeting with Kim Jong-un soon. He met his South Korean counterpart at the UN General Assembly and was told Kim indicated he wants to reach a deal on his nuclear program. The president said a second meeting would probably be similar to the June summit in Singapore, but probably held somewhere else.
I really believe North Korea has tremendous economic potential, and I believe that Chairman Kim and the people of North Korea want to see that potential arrived at, and we will help them to that end. And the relationship is very good. In fact, in some ways, it's extraordinary. We'll see what happens, but we will be having a second summit in the not-too-distant future.
The UK is warning that flights may be grounded if there's no reciprocal deal with the European Union on air travel. The government says it will continue to recognise European Aviation Safety Agency standards for 2 years after Brexit. However, there's no guarantee at the moment the planes, parts, crew and engineers certified by the UK will be recognised by Brussels after March the 29th. JP Morgan boss Jamie Dimon says it could take a generation before angry taxpayers are ready to forgive the big banks. He says Washington did the right thing to avoid another Great Depression, but admits it could take 25 years for people to accept that. Dimon also says President Trump is correct to admonish China on trade, but the tariffs are the wrong way to go. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Stock of the day's care rating. Monish Pabrai-led investment fund has bought in 1.74% stake, has added 1.74% stake in the company for a consideration of 1,224 per share, which is almost near to the market price that we saw in the previous session of trade. Pabrai Investment Fund held 2.2% stake as per the June shareholding pattern. So there is an addition of now the stake stands close to around 4% in this counter. What Elara Capital has to view on this particular rating agency, it says that the margin improvement, there is no improvement which has been seen in the EBITDA margin of the company. The advisory business continues to face competition along with the outsourced business, which continues to face competition from the group companies, and also sounds a note of caution on inability to scale up its non-rating business, which remains to be a major cause of concern. If you look at the EBITDA margin performance of the company from Q1 FY18 to Q1 FY19, the margins have remained pretty much stable or stagnant around that 35% kind of a level. If you look at the CAGR that the company has clocked in on 5 years basis, both on top line as well as bottom line growth, we're not seeing pretty numbers there, 10 and 9% growth respectively. However, if you look at the return on equity for this company on 3-year basis, there is a healthy number of more than 30%. A little bit about the company in terms of the valuation and how the financials work. It's a debt-free company, pays out a good dividend yield of around 5%. The dividend payout stands at around 76%, and that's how it pans out. That's the stock of the day.
Shifting focus to currency and commodities market, the Indian rupee yesterday ended sharply lower by 43 paise to end at 72.63 levels against the dollar. Now the local currency snapped its 2-day rally and ended 0.6% lower versus the dollar after crude oil prices climbed past $80 a barrel mark, once again ahead of impending US sanctions on Iran. That apart, if you see sovereign bonds too decline for the second straight day yesterday, as we have seen 10-year benchmark bond yield inching towards 8.12%. That apart, on the global front, dollar index ended marginally lower yesterday and it now trades steady near the 94.20 mark in the early Asian hours, largely weighed by stronger pound and euro. Well, pound yesterday rose nearly 0.3% after positive comments from German officials on Brexit deal, while euro gained over 0.5% 1% yesterday, largely after positive remarks by European Central Bank President. He also reiterated that central bank is on track to end its massive bond buying program. However, if you see now, both euro and pound are trading marginally in the red. That apart, if you see dollar rupee now, it is trading at 72.90 levels against the dollar in the non-deliverable forward markets, which indicates a weak opening for Indian rupee in today's trade. Having said that, let's shift focus to commodities market. Good morning, Jayesh. With depreciating rupee, crude oil prices have been a major factor for rupee depreciation. If you could start with that.
That's right. In fact, Saloni, if the rupee was not enough, crude oil prices have literally made a comeback in the overnight session with a 3% gain and Brent oil surging to the highest level since 2014. On the back of OPEC stopping short of just short of the output hike that was planned. In fact, with the 3% jump, traders are now seeing reality of about $100 a barrel becoming possible, and also that OPEC has mentioned that they will only boost the output only if the customers ask for it. In terms of other news, a Bloomberg survey indicates that the US crude oil inventory is likely to fall as much as 500,000 barrels for last week. But shifting focus to the base metal space, the index itself snapped its 4-day gain. Among other base metals, we had aluminium, which snapped a 2-day rally, while the zinc cancelled warrants rose about 22%. That was the most in a month, and that in fact provided upward impetus to the zinc prices to the tune of about 2.7%, with lead being the only other base metal to rise on the London Metal Exchange. As far as the losers are concerned, we had nickel, copper and tin, which declined on the London Metal Exchange. Now, if you look at the Shanghai Futures Exchange, metals have in fact resumed trading after a holiday and have in fact started on a negative note, with the Shanghai Steel losing as much as 1.1%. But as far as gold prices are concerned, we saw some bit of upward momentum for gold prices on the back of some renewed global trade tensions.
Well, amongst the stocks to track in trade today includes Infosys, which is one IT digitization solution contract worth 18 million Canadian dollars, with about 450 crores. So watch out for that name, as also for Yes Bank, which has retained its credit cost guidance for FY19 at 50 to 70 basis points. Remember, today is the board meeting to decide on the future course of action and probably appoint a new CEO after the RBI cut down the term of the current MD and CEO. Additionally, with respect to the domestic money transfer issue, the bank has reiterated that the method of tax computation on their transactions is correct. Nevertheless, they are going to make a payment of 38 crores that was demanded as per GST, while they continue to challenge the claim. So Yes Bank is one stock which is going to be tracked. Next is SBI Life Insurance, which is updated that the JV partner PNB Paribas Cardiff may cut the stake in the company to comply with the minimum shareholding norms. No decision has been taken on the tenure or the size of or the timeline for the cut, but remember, they held about 22% stake in the company. Next on the list of stocks to track is Dilip Bilcon, which has emerged as the L1 bidder for an EPC project worth 601 crores. Next on the list that we are watching out for is Zinza Technologies. They have won a contract to manage end-to-end infra requirements of a UK-based investment company, so positive development for Zinza Tech. And finally, you have Himachal Futuristic, which is won orders worth 558 crores from BSNL for Pan-India Defence Communication Network. So largely lots of order wins and stocks to track on the back of that.
Finance Minister Arun Jaitley is going to chair a review meeting of public sector banks in New Delhi today. On the agenda are a host of items ranging from credit offtake in the economy, priority sector lending, and the measures that these public sector banks have taken to improve their recoveries from non-performing assets. Remember, public sector banks recovered about 36,550 crore rupees in the first quarter of the current financial year, which was about 50% higher than the cash recoveries made in the same quarter of the last financial year. There's also likely going to be a discussion on measures that public sector banks have taken to come out of the prompt corrective action framework of RBI and the steps that these banks are taking to come out of RBI's PCA framework. Remember, there are about 11 public sector banks that come under RBI's prompt corrective action framework. This meeting also comes in the backdrop of a major announcement made by the government to merge 3 public sector banks, that is Dena Bank, Vijaya Bank and Bank of Baroda.
Well, the IPO of Aavas Financiers opens today, and the company has fixed the price band at 818 to 821. The total issue size is 1734 crores, out of which 400 crores is fresh issue and 1334 crores is an offer for sale by selling shareholders. At the upper price band, the implied market capitalization works out to 6,450 crores, which would make it a company potentially larger in terms of market cap than Repco Home or even Canfin Homes. This is what the post-issue shareholding pattern will look like. The promoter and promoter group held about 81% stake on a pre-issue basis. These are the names of the selling shareholders. AU Small Finance Bank also holds about 6.8% stake in the company, but they're not selling their stake. In fact, they're one of the largest anchor investors for the issue. Now, this will help provide a partial exit to promoters and augment the capital base of the company. So that's about the issue details. What does this company do? It's a retail affordable housing finance company which has started operations since March 2012. It's an erstwhile subsidiary of AU Small Finance Bank, which is now promoted by private equity players like Kedara. What do? They mainly lend to low ticket, high yield segments. So they're mainly targeting the low income, rural and semi-urban customers, and not largely salaried people but self-employed. They have a network of 165 branches spread over 8 states. But despite that, if you look at the geographic loan book breakup, 4 states, that is Rajasthan, Gujarat, Maharashtra and Madhya Pradesh, contribute to as much as 92% of the company's loan book. That's as of FY18. And just 1 state, which is Rajasthan or the mother state, contributes to as much as 46 to 47% of the loan book, exposing it to high geographic concentration risk. In the past, experience has shown that in case of a slowdown in the key states, it has also impacted the growth and profitability of the regional housing finance players. But as far as financials are concerned, the company has been able to post a 60% plus net profit growth in each of the last 5 years. In fact, if you look at FY14 to FY18 CAGR, the loan book has grown at 58.6% and net profit at a CAGR of 71%. Even if you look at some of the other operating parameters, they seem relatively healthy, with the gross NPA ratio of just 0.34%. It enjoys net interest margins in excess of 7%, while the capital adequacy ratio is extremely high at 61.5%, and that is one reason the excessive capital, which has depressed the return ratios for the housing finance lender. The ROE as of FY18 stood at just 11.2%, which has come down from about 15% in the previous financial year. Now, if you compare the valuation with the peer group at the upper price band on a post-money basis, the asking price to book value multiple is 4.1, which seems higher than the listed established players, especially given its low ROE profile. So largely what our brokerage is recommended, most of them have a subscribe rating. MK, Antique and Anandati have a subscribe rating, while Prabhudas Leeladhar has an avoid. This is largely to do with the brokerages believing that the long-term prospects of the company are strong, but valuations, expensive valuations, leave little room for upside, especially in the near term, and it exposes the company to a higher risk. So largely subscribe, but valuations look expensive.
Well, plenty of selling in the market yesterday. If you have a look at the delivery volume, that will show a lot of nifty names come up. The first one is Bajaj Finance. That was down about 5% in trade and saw delivery selling of more 666 crores. The delivery volume more than doubled for itself, as did the total volume when compared to its 5-day average. Second stock to watch out for, now that would be Eicher Motors, which was down about 7.5% in trade and saw delivery selling of more than 200 crores. The delivery volume surged about 106%, while the total volume rose 108% when compared to its 5-day average. Last and final stock, HDFC. Now this was down about 6.6% and saw delivery selling in excess of 1,200 crores. The delivery volume managed to surge about 68%, as the total volume surged about 85% when compared to its 5-day average.
The big brokerage calls for the day. First we have is Macquarie on the metal sector. Now the brokerage is expecting zinc, lead and silver prices to be lower for the rest of the year, while the aluminium and aluminium prices are expected to be higher according to the brokerage. Now the brokerage believes that the fundamentals are intact for these metals and they are seeing attractive value in select metal equities. Now they are also expecting the global demand to remain supportive at least throughout 2019, that is the next year, and they are also saying that a weak INR is an added tailwind for the metal stocks in financial year 2019 and for the next financial year. Now for Hindustan Zinc, they have downgraded the stock to underperform on the back of earnings headwind and premium valuations. For JSW Steel, they have downgraded the stock to neutral as it is trading at a fair valuation, says the brokerage, and the top buys in this sector remains Hindalco, Coal India, Nalco and Graphite India. Second we have is Goldman Sachs on Eicher Motor. Now the brokerage has maintained its buy rating on the stock with a target price of 37,358 rupees, which suggests a potential upside of nearly 44%. Now the company will be launching 2 new motorcycles in the foreign and in the domestic market. Now this new launch is not only a key catalyst for the stock but also a huge leap in terms of engineering quality and design, says the brokerage. Now what to watch out for with this new launches will be the launch price, the initial feedback that the experts given and the export volume that the management is expecting from these 2 motorcycles will be the key things to watch out from these 2 new launches.
There's lots to talk about over the course of the day, and you will find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. State-run Canara Bank has filed an application for initiation of insolvency proceedings against GTL Infrastructure over the alleged default of approximately 542 crore rupees, according to an exchange filing by the telecom infrastructure company. And according to a Bloomberg report, India is planning to sell its stake in SJVN and Power Finance Corp to other government-controlled companies. The deals may fetch the government about 20,000 crore rupees, helping it rein in the fiscal deficit amid growing risks of slippage, people with knowledge of the matter said. And with that, it's a wrap on all you need to know. But up next is Indian Open. Stay tuned to Bloomberg Quint.